Hello. Today is June the 15th, 2024, and I am Jason Shapiro with Crowded Market Report. Hope everybody had a good week last week. I wanted to speak today a little bit about what's going on as I see it from my perspective in the stock market. And I've done numerous videos where I've touched on the subject of how I felt about shorting markets that close on all-time highs, which is what we have in the NASDAQ and the S&P. And certainly, obviously, the conclusion is it's a bad idea for a lot of reasons. And you can go back and look at some of my previous videos if you want to hear me rant about that. But I just want to get into the current market, which closed at all-time highs in the NASDAQ and the S&P this week. If somebody wants to be bearish because they think the market's overvalued, I can't really argue with that because I'm not an expert in valuation. And I also believe that if you really want to be able to measure whether a stock market is overvalued or not, you need to have the next 5-10 years of earnings growth in order to try and measure that. And you can't have that, obviously. People have their estimates for that. But history has proven those estimates have never been right. They could be too high. They could be too low. I don't know. But we don't have that information and with any kind of accuracy. So to tell me the overvalued part, I don't know how you know that. I know I don't know that. And of course, there's the phrase that valuation is a horrible timing tool. And it is. But if you think the market is super overvalued and you believe that, then get out of your stocks. You don't like to own overvalued assets. You like to own undervalued assets. Then get out. But doesn't mean you have to be short. Okay. Because you would have been making this overvaluation argument months ago. And okay, you missed out on some upside, but at least you're not losing money off of it. So that's the first idea. But the thing that's kind of been getting to me this week is this idea that the market is in a euphoric state, that this is euphoria and it's a bubble. Because this is something I know a little bit about. I've been trading the markets based on sentiment and positioning for the better part of 3 decades, right? And it's not to say I always get it right. I don't. But what I'm here to say is there's nothing showing us that this is euphoric. And this is a very important point. People want to be contrarian. Okay. But what you don't want to do is be contrarian price. That's the mistake. That's you fighting the tape, right? You want to be contrarian participation, right? So it shouldn't be the idea of, oh, this market's gone up so much, therefore I'm going to short it. It should be the idea of everybody on the planet is long this thing and bullish this thing, so I'm going to look to short it. Well, I'm here to say we're not at that point. Okay, these are the things that I look at and measure for years and years, and we're not at that point. And here's a few charts to show. First of all, even without the charts, first of all, I can tell you that people want to say this is 1999 all over again, and I'm here to say it's not. I was there in 1999, and it was completely different. You had everybody talking about the stock market in 1999. It's all anybody talked about. You go to lunch, the whole restaurant would be talking what stocks they were buying and the stock market and this and that. And it was insanity. Okay. And I was through another one of these in Asia, when I lived in Hong Kong, in 1994. And it was the same thing everywhere you went. And you had small, these micro cap stocks, same thing in 99. These microcap stocks are worth nothing, going up 10 times in 2 weeks and all that. I don't see any of that here. In 99, we also had like rock star analysts. Mary Meeker was like a rock star. Everybody knew her name. She was one of the most famous people in America. Can you name me an analyst now? I don't know any. IPOs in 99 were going off the charts every day. They couldn't get them out fast enough. And these stocks would be priced at like 30 and they'd open up at like 130, right? Instant millionaires. I don't see any of that now, right? I don't see any of that stuff now from a general sentiment point of view. And I think this brings up an interesting point because you had this generation, my generation, that was involved in 99. And for the most part, they weren't calling it a bubble then. They were riding the wave up and making money. And then they rode the wave down and gave all that money back. And they have promised themselves that they would never let that happen again. So therefore, they're not getting involved in this one because they've seen this before. And then you had the next generation, which was the 2021 generation. And in 2021, we did have signs of these bubble type things. We had the SPAC thing going crazy. We had all kinds of people day trading stocks with the attitude of like, you didn't have to take a loss because the market always came back. So you just waited until it came back and then you took your profit. And a lot of those stocks, these are like the Cathie Wood type of stocks, went down 70, 80, 90% and really haven't recovered very much since. So now those people have vowed to never be bag holders again. So they're not going to chase. They're saying, oh, I learned this in 2021. I'm not going to do it this time. So the ironic thing is that without those people involved, you don't have a participation bubble, right? So they're all calling it a bubble, but they're not participating. So therefore it's not a bubble. And that's a very hard ego thing to get over. But that's just the facts of how sentiment and participation works. All right. But here's some charts to show that too, as far as like positioning goes. So this is a positioning chart in the futures market of the four major stock indices: NASDAQ, S&P, Dow, and Russell. And, the blue indicates like large speculators, and they should be super long. Like this is where they get kind of super long, this kind of level, right? But right now they're here. Actually, they're short still, right? They're not super short like they were back in the lows, but they're still short. Like this is not massive speculation going on here. It just isn't, right? This is a chart. Well, let's go to this one first. Okay. This has been going around this week and is the most popular chart in the world right now, which again goes to speak to where sentiment is. But this is the famous breadth chart now. And I guess this is the equal weighted S&P versus the regular S&P. And it's showing how the equal weighted is underperforming the regular S&P by massive amounts and continues to, right? Indicating that there's very small breadth. It's NVIDIA and a couple other stocks, right? And it's comparing this to 2008. That's very sexy. 2008, we know, was the big crash. But you know something? This was at the end of 2008, which is when the market bottomed. So what you're telling me here is that this is where it was at the last time the market had a major bottom, which is amazing because we're at tops here. We're at all-time highs here, but whatever. The point is, if you bought the stock market the last time this chart was here, you're sitting on a small fortune now, or maybe even a big fortune now, right? So this argument, it doesn't make sense to me, right? I think that talk to me when there's huge participation in all the different stocks and everything's going up. Then we can talk about euphoria, So that's my thought on that one. And this is interesting because this is a positioning, the current positioning of the DBMF, which is it's a managed futures ETF, and managed futures for the most part are supposed to be trend followers. Okay. And you look at the S&P positioning, they basically have no S&P positioning. How is a trend follower not long stocks here? What's the definition of a trend? We're talking about markets that are at all-time forever highs here on the S&P. And yet these aren't long the S&P. I mean, of all people, like I can understand people that are trying to trade fundamentals or macro and they don't want to be bullish or whatever. That's fine. But a trend follower doesn't make that choice. A trend follower just follows a trend. Market's on all-time highs. How is the trend not up? How are these people not long? I don't get it. I just don't get it. I don't know where the people are, but this is the most, in my view, hated bull market I've ever seen. It seems like the big game these days is who can pick the top of the stock market. This is not what the top of a bubble looks like. Can the market go down from here? Of course it can. Things happen. Markets go up, markets down. Of course it go down. But to make the argument that this is a huge euphoric bubble, it's just not true. in any way, shape, or form. Okay, so think about that if that's what you're trying to fade, right? Anyway, that's kind of my idea today. I hope you enjoyed. Always happy to hear questions and comments. Please like the video if you like it. Please join us at crowdedmarketreport.com or go to our Substack, which is free, and sign up there. And we will talk to you again next week. I hope everyone has a good weekend, and we'll talk again. Thank you.